think that we can go ahead and kick this off. My name is Jonathan Zakorski. I am a program manager here at Universal Processing, focused on the Community Navigator pilot program. It's an SBA program in place to connect underserved and minority-owned businesses to valuable resources across the country. So today we'll be taking you through a crash course on we have Anthony Lee from Adelphi Solutions joining us tonight. Why don't you give us a little bit of a background on yourself?
First off, thank you for having me. It's a pleasure. I'm very happy, even though I can't see all of your faces. Very good to meet all of you guys today. My name is Anthony. I'm part of Adelphi Solution. I think this program, the Community Navigator pilot program, really helps that underserved community. I'm Chinese, and sort of my whole start with ERC kind of came from our community. Growing up, my parents, the people that we grew up around, they weren't necessarily the most trusting of people outside of the community. And so post-pandemic, there were a lot of Chinese business owners based out in New York, where I'm from. There's the Flushing Chinatown, as well as the Manhattan Chinatown. And this is kind of where we realized that there was a gap in knowledge when it came down to underserved communities. We took action and we started working with a lot of the businesses. We reached out through our network, and then we were able to serve a purpose to help them get the ERC program. We realized that outside of New York, outside of our community, there are still a lot of people who don't know about the program. Started putting our efforts into reaching as many people as possible. And here we are today. We work in all 50 states, and we've been able to help out a ton of small business owners just like yourself.
Great, Anthony. Thank you very much. We do have a bit of an ERC study guide where you can follow along with Anthony's presentation tonight. That's in the chat. But without further ado, Anthony, why don't you take us away?
So ERC, the Employee Retention Credit, it is a refundable business tax credit. It's a payroll tax credit that was created to reward business owners who kept employees on over the pandemic. So this includes W-2 employees over the period of 2020 and 2021. So there's two ways that business owners can get qualified for the ERC. The first one is the one that you probably know about. It's called a significant decline in gross revenue. And so what that is, think of 2019 as a baseline. It's a year before the pandemic. The economy was quote unquote very good. And what they do is they compare your performance of your business over the year of 2020, quarter over quarter, and also compares 2019 with 2021. And so at a very high level, it is a payroll tax refund up to $26,000 for each W-2 employee, based off of eligible wages that you guys have. So this varies a little bit from business to business. Any businesses in all 50 states of the United States, it's applicable to all kinds of companies. Look at is that if you have W-2 employees and you've issued W-2 forms, which also includes the owner, it goes from a minimum of 3 people to a maximum of 500 people. A small business is considered any sort of business with less than 100 W-2 employees for the year of 2020 and less than 500 for the year of 2021. Who can apply for the ERC program? Like I mentioned before, it kind of started off as where the idea is that a lot of people think that you needed to have a significant decline in gross revenue. The two numbers to kind of look at for your intents and purposes is 50% drop from 2019 compared to the year of 2020. For example, they compared Q1 of 2019 to Q1 of 2020. They compared Q2 of 2019 to Q2 of 2020. And when you measure the 50% drop, it's going to be the difference between the two quarters. A lot of people have spoken to their accountants before, and they didn't have a significant drop in revenue. And so the accountants tell them that they don't sort of qualify. I think the biggest misconceptions that I have when I'm talking to customers or talking to small business owners is that they believe that they don't qualify because of that reason. From IRS guidelines, they've released a super intensive report, 140 somewhat pages. They've added that there are two main conditions. So one being the significant decline in gross revenue, and the second one, it's full or partial suspension. So whole or in part due to government orders related to the COVID-19 pandemic. I just had a conversation today with one of our partners, and I can kind of give you an example so you guys can fully understand. We're working with a biotech firm in out of California. And so here's a part of their business. They have revenue, they got venture funding, they have 20 W-2 employees. They were open in 2019, and they were kept open over 2020 and 2021. The way that full or partial suspension works, I think it's always best told through a story, right? And here's the kind of story, here's the way to understand. There are going to be state laws There are going to be local laws and then also executive orders that fall into place when taking full or partial suspension into consideration. So for example, they had to change the way that their labs were operated due to indoor occupancy limits. The 6 feet restriction was taken into place. They had several sectors of their business that was taken into consideration for their qualification for the employee retention credit. So one, from the year of 2019, they had 3 departments. Let's call it DNA sequencing, let's call it oncology, and let's call it some sort of engineering department. That made up a part of their revenue. When COVID-19 came around, they made a shift into working on COVID-19 vaccines. And so the way that their business shifted internally on where they made their revenue. One of the main things to take into consideration, or the guideline as provided by the IRS, is that you need a 10% nominal change due to executive orders or state orders that suspended your business or affected your operation in a certain type of way. I think a granular example would be for a specific sector in your business. So for this business, for example, oncology, which has to do with cancer, they did cancer research. Let's say in 2019, they did $200,000 in revenue. And in 2020, because of the COVID-19, for any way that they were, because the way they did business, because of the restrictions, they did $100K in revenue when it came down to the oncology sector of their business. Because this dropped 50%, even if revenue kind of stayed the same, given that they jumped into COVID-19 vaccine development, which was a really big thing during that time, because of that 50% change in that specific sector of their business, they were able to get qualified for the employee retention credit. Think about ERC as a program that's aimed to help you out for surviving the COVID-19 pandemic. And the way that you would qualify is a combination of the drop in revenue and or being affected by your local, state, and executive order in a way where your business was full or partially suspended. The maximum application of $26,000 per employee, the ERC number that you're going to get is going to be the number of eligible employees multiplied by the maximum amount of tax credit per employee. So the way that you can think about it is that there's $5,000, which is the amount that you can claim for the year of 2020. This is due to the business being able to claim a tax credit of up to $5,000 per employee, which is 50% of the employee's qualified wages. In 2021, a business can claim a tax credit up to $7,000 per quarter, which excludes the fourth quarter, which is 70% of the employee's qualifying wages. 5,000 plus 7,000 multiplied by 3 quarters, we get $26,000 for the ERC program. What are some of the misconceptions that you might have when applying for the ERC? Does ERC have to meet both partial shutdown and the significant decline in revenue at the same time? According to the information on the IRS website, either one will do. In 2020, employers who meet one of the following conditions are eligible to apply. Due to government orders related to the epidemic, there's a partial or complete suspension in trade of business operations or a decrease in business turnover. So that, like I mentioned before, 2 ways to qualify. One is going to be full or partial suspension or significant decline in gross receipts. To make an example, let's say you made $100,000 in Q3 of 2019. If you ended up only making $40,000 for that same quarter in 2020, so Q3 of 2020, then you will be able to qualify for that specific quarter. This is the misconception. It's not both. It's one or the other. The number one reason why business owners sort of disqualify themselves is because they didn't experience a significant decline in gross revenue. I'll give you another example. Let's say you make most of your money going to conferences and you normally send out 10 people to a sales conference, business to business. And each time you're at the conference, you make $200,000. Because of the indoor occupancy limit and social distancing, and there's going to be an exact executive order depending on where you're going to be, you are only able to send 1 person or 0 people. And because you made $200,000 the year previously from this one time a year conference, trade show that you guys go to, this is something that ERC firm, or this is something that an accountant would be able to do if they understand the program, to help get you guys qualified for the ERC due to full or partial suspension. There's many ways to kind of, you can send a message inside the chat if you would like more examples. I got a whole bunch, but really it's a really case by case basis depending on the nature of the business. So what is the requirement to simultaneously meet partial shutdown and decrease in revenue? So either one will do, right? So full or partial suspension of their trade or business during this time period because of government order limiting commerce, travel, or group due to COVID-19, or like we mentioned, the decline in gross revenue. What's the threshold? The number to think about is more than 10%. It's considered a partial shutdown. And so the way that I kind of look at ERC outside of this whole thing is that there are states that have been more restrictive than other states. I come from New York. When it comes down to the restaurants, I don't know if you guys are based out in New York, but if you walk through the streets, there's still remnants of wooden structures built to kind of increase the amount of traffic that can go to these restaurants. And the way that it works is that if people went to a restaurant and you weren't allowed to have that many people in at the same time, and if that affected your revenue more than 10%, then they would be able to get qualified. Another misconception is that PPP loans conflict with the ERC. On one hand, I would be lying if it doesn't, but before, or a lot of people still think that just because you took out the PPP means that you cannot get the ERC. We'll kind of read through this. Retroactive to the March 27, 2020 enactment of the CARES Act, the law now allows employers who receive the Paycheck Protection Program to claim the ERC for qualified wages that are not treated as payroll costs in obtaining the forgiveness of the PPP loan. And so there's no conflict, but also at the same time, they don't want you to double dip. And so a lot of the cases, for our intents and purposes, when you have the PPP loan, you can still qualify for the ERC, but the amount that you can qualify might be less depending on when you receive what payroll period that you received the PPP. In addition, also when it was going to be forgiven and whether or not it was forgiven. What are the big potential risks? It's always advertised as the sort of free money. It's always advertised as this thing that you must get. There's a lot of information out there, and it's important that you get the right one and you make the right decision. So, will the government audit my turnover? Generally not. In the case of a business experiencing declining turnover, or in our case, decline in revenue, it is possible that government might request an audit to verify the accuracy of the reported turnover. However, if an application for partial shutdown has already been submitted, it's typically not necessary for the government to conduct an audit. Does the timing of the application have an impact? This is something to take into consideration. This is something that's already happened. The normal deadline for filing for the 941 is 30 days after the end of the quarter. The deadline for submitting an employee retention credit is within 3 years after the end of that 30 period. So if you really think about it, where we're at right now, Q1 of 2020 is no longer applicable unless there's a significant decline in gross revenue. As we move towards the future, for example, the second quarter of 2020 will expire on July 31st, 2023. The more we move into the future with each quarter that we move forward, there's going to be one less quarter that you guys are going to be able to qualify for. So starting in July 31st, 2023, every quarter will result in the loss of a previous quarter's check. So think you can qualify for 1 or maybe 2 quarters in 2020 because of significant decline in gross revenue and or full or partial suspension. The amount of available quarters that you might be able to qualify for gets eliminated because of that 3-year period of amending your 941. So in conclusion, the later you apply, the greater the loss. Here's a real life example of an electronics component company with 120 employees that has successfully obtained a $1 million ERC grant. The company's main business is an international electronics part trading. It has successfully applied for a PPP commercial loan of $1 million in total. And during the pandemic, the factory was forced to shut down by government orders, and the profit first declined, then increased. A private accountant opposes applying for the ERC, stating that the increase in revenue and the fact that PPP loans have already been applied for do not meet the eligibility criteria. This is false. The IRS regulations prove that they could possibly apply for the ERC and receive a loan of $100,000. ERC is not a loan. It is a refundable payroll tax refund. On average, I think I'll add from my experience, the number $26,000 is set around a lot. It's like, hey, you're going to make this much money based off of how many W-2 employees that you guys have. As an average is, if you guys do qualify, you're looking at a national average of around $10,000 for each W-2 employee. This ultimately depends on the size of your payroll. If you have part-time employees that are on W-2, obviously you're not going to get as much as someone who has a full-time salary and in a state like New York. So it really varies for a lot of different factors. But on average that I've seen working with hundreds of businesses, the sweet spot is going to be $10,000 per full-time W-2 employee that you guys had to onboard during that time. So the application process, the unemployment insurance for 4 quarters of 2020 and 2021 for enterprise, the 941 form for both quarters of 2020 and 2021. So usually when this is submitted, there's going to be a couple of more things. There's going to be your PPP information to make sure of the timing. They're going to ask for payroll journals, wage data. They might ask for the exact operations, the way that you guys have been disrupted. And depending on the nature of your business, they'll ask for something more specific. The way that I like to think about the ERC, it's a combination of the numbers. If you have significant decline in gross revenue, which is that, losing money part of the qualification. And if it's full or partial suspension, it's really an anecdote about how laws, restrictions, and local orders have affected your business in a way that was more than 10%. So each business is different. And the nature of each business is different. There are essential businesses and non-essential businesses. And the way that this all comes together, it's kind of like a crossroads between traditional accounting, which is like the reason why you talk to your accountant and tell you that you don't qualify, is because they don't truly understand. It's something that's pretty complex and you need to be able to build a solid case. It's a crossroads between payroll analysis and traditional accounting. And so it requires a little bit of like understanding these laws, nature of the business, and then looking at the numbers and then the accounting. After you have everything together, the typical turnaround time takes anywhere from 3 to 7 days. If there's some forms that are missing, it might take a little bit longer. I know getting forms might be a hard part about the business. What they call a 941, which is an amended 941 form, was going to be generated, and this will be sent over to the client, where the president or the person with signing authority is going to sign the form and then send it to the IRS to review. Once the accepted handling process, realistically, it says, 1 to 3 months. I'll tell you the inside scoop right now. What I'm seeing is that things that I've mailed out that we've worked on since November and December are coming into fruition now. So there was Thanksgiving, there was New Year's, there are all these holidays. And because there's never been anything like the COVID-19 pandemic before, and there hasn't been a program like ERC, we're just a little bit behind. So realistically, the lead time is going to be 4 to 6 months. If you're on a smaller business, and if you have a much larger business, you might look at a timeline between 8 to 12, up to 14 months. And it's a little bit incongruent with what the PowerPoint says, but I'm just going to be honest with you guys. These are the numbers that we're seeing. So after there's going to be a transcript, the IRS will approve and basically set a date out where they send out the check. And then the check goes to either your designated business address or a CPA if they're going to be sort of the place where all of your documentation and tax stuff goes to. So you're going to receive the check. It's a US Treasury check. It comes straight to the mail, and it comes in multiple pieces sometimes. That's what you can expect once you get the ERC. What should you do after you get the ERC? After you get the ERC, you're going to contact the company's accountant to complete the tax procedures. Here are the essential steps after submitting an ERC application that has been approved. You need to contact your accountant, and then you need to calculate the remaining amount as net profit and amend it to the corresponding quarter. So we'll kind of run this down now, talk to new businesses all the time. We work with churches, we work with, nonprofits, we work with schools, we work with biotech companies. It's very complex. And I have conversations with my consultants and everyone on my team every single week to make sure that everything that we do is correct.
Anthony, thank you so much. I will plug CNPP one more time. We are happy to field these questions for you. That's why we're here. As another point, we'll be holding an in-person event in Flushing on May 30th. If you have any further questions, we'll be there to provide some more one-on-one counseling. Look forward to seeing you there. We'll be sending out an email blast with a little bit more detail on that. I think we're ready to conclude. Anthony, thank you again, and look forward to continuing to work with you.
Cool. No worries. Thank you everyone for joining. Hopefully I was able to provide some value. And if you guys have any questions, my information is here. I'm happy to reach out, and the team at CNPP, awesome. Thank you so much for having me, and hope to work with you guys again soon. Thank you.